Hey there, POA champion. Let's jump into another video. Let's discuss some manufacturing accounts questions. And I'm praying and hoping that you get to cover topic 10 and 11. A lot of the students don't get to cover the later topics on the syllabus, but I hope that you get to cover manufacturing accounts, which is what we're going to cover today. I kind of hope that you are one of the lucky students who would have covered it already. And you just more or less recapping the syllabus now, right? Let's jump into these questions. As always, these questions are similar to the CSEC questions. And yeah, some of them are a bit tricky. But before, let's start with our why. I get this question all the time. Why is the manufacturing account important? I'm just going to give you guys 3 reasons now. 1, it simplifies the income statement of a manufacturing business, which is a business that manufactures the goods that they sell. The manufacturing account also, it is used to calculate the cost of production. When you have to create an income statement for a manufacturing business, cost of production has to be used instead of purchases, right? So when you are doing a cost of sales calculation in the income statement, once it's a manufacturing business you're dealing with, you will see no purchases in that cost of sales calculation. I think we have a question on that, so we're going to see. The third thing is it can be used to improve, analyze, and manage the cost of a business's manufacturing activities. It's super important for manufacturing businesses. Not all businesses will buy the goods that they sell. A lot of businesses would make what they actually sell, right? And those are what we call manufacturing businesses. Let's go. Number 1, the following are all indirect costs except. So we have office expenses, utilities, depreciation of factory machinery, and piece rate wages. One of these 4 here is not the indirect cost. Which one would it be? The answer here is D. This is the only cost in the list that can be easily traced back to a single product. The piece rate wages is going to be easy to track back and say, okay, this is the amount of wages, or this is the cost that relate to this product. Think of a bakery. If you have a bakery and you pay utilities like your light bill or your water rates, would you be able to track and see how much of your light bill would relate to the manufacturer of bread? Would you be able to track and see how much of your light bill or your water rate will relate to pastries? It's going to be really challenging to check and see, okay, how much of this bill relates to the actual products that we make, right? So because it is hard to track back or trace to a single product, we will call that an indirect cost. And in this question here, the only one that is easy to track back is the piece rate wages. A lot of persons always mix up depreciation, but the depreciation of our manufacturing plants or equipment cannot usually be directly tied to a single product, because they have some machines that will be used to produce a lot of products. You might use the same mixer for your cakes, for your bread, and any other little product, right? But generally, depreciation is hard to trace back, and it's hard to be directly tied to a single product. But rather, it supports the production of all the products that you would generally make in your business. Therefore, it is classified as an indirect cost. But to know, the following info relates to our manufacturing business. So they give us revenue, 625. They gave us the finished goods at the beginning of the year. They gave us the finished goods at the end of the year. That is the third item. They gave us the cost of production. They gave us operating expenses. And they gave us the purchases of raw materials costs. They want us to calculate the cost of sales of the finished goods. So which option is the correct one? Now, I always tell you guys, try to pause the video and do the questions and then look at the answers. So pause this one, especially this question. You want to pause it, do it, and then look at the answer, right? So I'm hoping that you will have paused. The answer here is B. The basic formula for cost of sales of a manufacturing company is Opening inventory of finished goods, add the production cost minus the closing inventory of finished goods. Make sure you learn this formula. Let me say it again for the persons in the back. Opening inventory of finished goods, add cost of production, minus the closing inventory of finished goods. That's going to give you your cost of sales for a manufacturing company. Based on the information that I just shared, let's pull the figures from the question that they give us, and let's work this out. We're going to take the 17,200, add the 339,000 for your cost of production, and then minus your closing inventory for finished goods, which is 14,400. When you do all of that, you're going to end up with 341,800. So again, the answer here is B. Make sure you learn this formula for cost of sales of a manufacturing company. If you're struggling with manufacturing accounts, income statements, adjustments, ratios, any of those things, right? And you don't think you will cover these topics before exams based on what is happening in your school or in your life, we have a program to help you where you don't have to be worried about classes clashing, or you don't have to be afraid to ask the questions in a room full of people. So go ahead and check out the link in our description so that you could get all the information relating to that program as soon as we are done here. Number 3, they ask, when preparing the final accounts of a manufacturing business, carriage inwards on raw materials should be always included in what? So they give us 4 items here. Which one should the carriage inwards on raw materials be included in? Carriage inwards is included in the manufacturing accounts. Not the income statement, not the trading account, not the appropriation account. Carriage inwards is including in the manufacturing account once you're dealing with a manufacturing business. The way you do things in a manufacturing business is going to be a little bit different than how you would do it for any other type of business. Carriage inwards is a direct cost to a manufacturing business, and it is added to purchases when we have to create the manufacturing account. Congratulations, you made it through 3 of the questions. You have 4 more questions to go. Again, these are really tricky questions, so I hope that you're giving yourself the time you deserve to go through these questions. Don't let anything rob you of the time that you're putting in here to enhance your knowledge and strengthen your knowledge on this topic. Number 4, they want to know what is the prime cost of production. They give you some information. What is the prime cost of production? Pause the video if you didn't do it already. And try the question, then go on to the answer. So prime cost is equal to a total direct cost. We say that again for the persons in the back. Prime cost is equal to a total direct cost. And here we only have 2 direct costs, right? We have cost of raw materials consumed, and we have direct factory wages. When we add those 2 together, you will get your prime cost, which is 15,000. So the answer for this one, number 4, is C. Number 5, PAA Limited has lighting expense of 800. So the total lighting expense is 800, which has to be shared or apportioned as follows. Factory will get 3/4 of the cost, office will get 1/4 of the cost. What amount for lighting expense should be entered in the manufacturing account? What amount for the lighting expense should be entered in the manufacturing account? Well, the amount of expense that should be entered in the account must relate to the factory only. The amount of expense that should be entered in the account is that amount which relates to the factory only. You're going to take 3/4 and multiply that by 800. You'll get 600 as the amount that should be entered in the manufacturing account. Why are we finding 3/4 of the 800? Because they specifically told us that 3/4 of the lighting expense related to the factory. This is as close as we can get when it comes to tracing back the cost to your production. All right, congratulations again. Now it's a big deal that you are staying on this video because it's so easy to get distracted, right? So congratulations. We have 2 more questions to go. Let me know in the comments how many you got correct thus far. Let's celebrate our small wins. Drop it in the chat. Let's see how many you got thus far. So out of the 5, we just pause for our thoughts. Okay, number 6. Items which are not completed at the end of the year in a manufacturing business are called, I see a lot of people mixing this one up, right? What do you call the items that are not completed at the end of the year in a manufacturing business? Well, the items which have not been completed at the end of the year in a manufacturing business is called work in progress, not unfinished goods. Hold on now. Yes, they're unfinished goods, but the correct term or name is work in progress. Please do not, I repeat, do not put unfinished goods in your manufacturing account, right? The correct term would be work in progress. And number 7, the last one, they want us to calculate the cost of production. So they give us prime cost is 79,110. Office expenses are 3,000 and the factory overheads is 4,720. OMG, what do we add or what do we take away? This is what you might be wondering, right? And friend, if that is what you're thinking, you need to strengthen your knowledge on this topic. Because if you don't know how to calculate the cost of production, what has to be added or what has to be taken away, we have some work to do, right? But let me help you out with this one really quickly. And if you want me to do a deep dive with you and go through the past papers and the whole 9 yards, I'll be happy to do that in our online program. Again, you will have to check out the link in the description for info on our program. We will add our prime cost and our factory overheads together for us to get the cost of our production. So we're going to add the 79,000 and change, and we add in the 4,000 and change. That is going to give you C as the answer, which is 83,830. If you know, you know, right? Once you know, it's easy to do the questions. When you don't know, it's a different story, right? This was such a simple question. If you know what to do, if you know what has to be added. We do not include our office expense when we are calculating our cost of production. That will be included in our income statement. All right, that's it. Congratulations. We just went through some of the tricky questions I go through with my students in our program. If you want to make sure you pass POA or increase your chances of passing POA, come join us at the POA Academy. And as always, I ask you guys to let me know if this was helpful. I don't have time to waste. I want to know if I'm helping you guys. Let me know if you want more questions on this topic. And also subscribe, like, comment, and share.